Alright guys, welcome back to another video. So in this video what we're going to be doing is we're going to be going over a setup called basically a break of the low, or what I'm going to be referring to as BOL. So we like to abbreviate our setups, so when we go back into our trading journal and we can look at all of our winning trades, all of our losing trades, we can see what trades won the most, we can see what trades won us the most money, we can see overall what trading setups are most profitable. And in this situation, basically what we're going to be doing is going over a setup called a break of the low, which is literally as self-explanatory as it actually is. So on this setup, basically what we do is we use a 5 and a 15 minute time frame, or a 5 minute time frame, or a 15 minute time frame to be able to take these trades. Now these trades aren't trades at areas of support or resistance, but these trades are all based off of market structure, and I'm going to be giving you guys a few examples of these types of setups. So in a situation where you're actually trading and you're in live market conditions and you see price actually give you market structure where price is forming lower lows, lower highs, lower lows, essentially what you're trying to do is basically take a break of the low and you're looking to take price into a new low. So in this situation here, right once price formed this area of support, and notice the actual struggle of this area of support, you have to identify what the low actually is, because you could have taken a trade of a break of a low right here and possibly gotten stopped out, but the low is actually going to be right here. Notice this is the low before price actually pulled up and came back down. So what we're basically going to be looking at is one of two options. Now I'm going to give you guys obviously the positives and the negatives. So in a situation like this, where this is the actual low of price, right? What we actually have is price actually come down, form a low over here. And then price attempted to go down and form lower, which essentially that's when you would have potentially looked at taking an entry. But in this entry, depending on your stop loss placement, you would have actually gotten stopped out. You have two different types of entry placements and stop loss placements with these types of trades. Essentially, your entry could be right after the break of the low itself, with your stop loss above structure, your targets being your next structure point, which ultimately that's not the way I would look at trading it, right? To give you guys a clear-cut example, the best entry method with this is to wait for price to actually close under the low itself. But you could also look for price to kind of just break under the low and take a move off of the fluctuation of the candlestick itself. So right once price broke under the low, essentially what you would want to do is look at the highs and the lows of the candlesticks themselves. Right once price broke under the low, which is going to be the candlestick that broke and closed under the low, then you would want to place your stop loss slightly above the high of that actual candlestick itself. So in this situation, if you take a trade here, your stop loss placement is going to be slightly above the candlestick itself, and obviously price needs to be trading under the moving average for you to sell. And our goal here isn't to look for a massive move. Our goal here is just to simply look for a 2-to-1 risk reward ratio, and then we're closing the position. That is going to be the goal with a break of the low. And if you want from there, you can continue to trade your stop loss to look for a bigger move. So that is going to be one example. Right once price closed under, then you would have actually looked to take a position there, and that's where your price would have actually played out. Price closed under, stop loss goes above the high of the previous candle, or if you want to be safer, it goes above the high of the last previous candle, because price could come and actually test the high of the previous candle, and then you would look for a 2-to-1 risk reward ratio. Nothing more, nothing less. Obviously you guys can backtest this system and see what works best for you, stop loss placement, etc., etc. This is kind of just what I do as of right now. So you can also do this with different support trades, but ultimately you would actually want to do it based off of market structure and trade this system simply solely all based off of market structure. More importantly though, you have to actually be in session and price. There needs to be volume for you to actually be able to take these types of trades. So here's another example of a break of the low, where we see price come up, come down, come up, come down, come back up. So you can identify that there is a low actually formed right about here. This is going to be the low where we have structure actually formed, and we have price come all the way down and close under. notice price closed back above and tested the actual high of the previous candlestick. So in this situation, you know, if your entry is here, that doesn't mean that your stop loss is going to be literally right here. You want to be realistic with your stop losses as well. Like I said, again, you can shoot for the previous stop loss high, which would be all the way over here, which that would be a pretty large stop. You would aim for a 2-to-1 risk to reward ratio, which essentially you would have gotten taken out of the trade here in a win, or potentially even here. But again, the goal is to have your stop loss significantly above the high of your entry candlestick, which in this situation would be roughly around here, and price is also trading under the 21 SMA there as well. So that's also another example. Now, in a situation where if you would have taken a trade on this candlestick, then your stop loss goes above the high of this candlestick over here, but then I would obviously put it above this candlestick right over here. So that's an example, another example at least, of price breaking the lows and actually going to attempt to try and make new lows. Now, I only take these setups again when price is under the 21 SMA and we're trending bearish. If price is trending bullish, then we're going to be looking for a break of the high, which we'll go over that in a different setup scenario. Now again, price is clearly trending bearish. We have a big impulse to the downside. That is what we want to see, a big impulse to the downside. Then we have price actually form support here. This is going to be our low around this range here. So if price were to actually come down and price started to go bearish. Now, again, here's the thing, pros and cons of every system and every single setup that we see. Notice how price actually tempted multiple times to close and break under, right? If you wouldn't have waited for the candlestick to actually close, then essentially there would have been a trade where you may have lost money here, you may have lost money here, and then you possibly, you know, if you would have continued to trade, you may have made it back here. But again, it comes down to waiting for that candlestick to actually close to try and avoid all of this chop that you could see. But then there's going to be times where the candlestick is too large and you're not going to be able to take the actual position. So in a situation like this, I just simply recommend to wait for a retest where you could have then taken a trade later on throughout here. But now, since you have price break the low right here, such as this one, then again, all you're simply doing is taking a trade right once price closes under the low. Your stop loss goes above the wick or the previous wick before that, and you look for a 2-to-1 risk to reward ratio just to simply get in and out of the market as quickly as you possibly can, which is going to be a setup that we have right here. So this is no trade. This is an example where you would take a position there. Now let's look for another example of a break of the low. You see, like, the thing is, in this situation would have been a little bit different. So here we have the lows over here. Here you have price close under the low itself. Now your entry obviously would have been over here. Stop loss would have gone above this high, or typically I would like to place it above the previous high, just to give price a little bit more room to breathe. 2-to-1 risk to reward ratio, and then there you go. You have your 2-to-1 risk to reward ratio quite nicely before pullback, and then you could have potentially even gotten in on another break of the low over here. Price did close under there, but it's really not the strongest close under. So there's a few things to take into consideration here. You know, so if you look at the overall median, it could have worked out in your favor, but I like to kind of look at the overall lows and the highs of the market. Essentially, when it breaks a low, then great. We'll continue to look for price to continue to make new lows, because again, when price makes a low, it has a high probability of continuing to go down to make another low. So here's actually a great example of why stop loss placement is so important. Because we had price actually close under. So your entry signal for a break of the low setup or a BOL setup is going to be right here. And if you would have placed your stop loss slightly above this high here, above the candlestick you entered on, you would have been stopped out of that position. But if you would have placed your stop loss above the second candlestick high, which is over here, you would have been just fine. 2-to-1 risk to reward ratio, which is going to be down here roughly. And then look at that. Price consolidated for a bit, but then continued to go down and actually make new lows, and you got your 2-to-1 risk to reward ratio. You can also go for a 1-to-1, but for me, I'm always going to go for a 2-to-1 no matter what. Stop loss I break even at a 1-to-1 risk to reward ratio. And that is going to be it for this video. It doesn't really have to be too complicated, nothing too long, but I definitely did want to cover that for you guys, and I will talk to you guys in the next video.